Welcome, dear traders. On a Monday, markets see cautions trading in the Asia-Pacific stock exchanges. The conflict in the Middle East increases the demand for safe haven assets. In addition, stock indexes are declining under pressure from a possible rise in inflation in the United States and the Eurozone. Furthermore, a number of key reports on the Chinese economy are due this week. For example, China's GDP for the third quarter and industrial production and retail sales data in September. These reports will show whether Beijing's stimulus has helped revive the country's sluggish economy. On a Friday, China's National Bureau of Statistics reported that the consumer price index fell to 0 in September. Given that the inflation target is set at 5% per annum, the threat of deflation was confirmed. The fact is that the People's Bank of China is following its Japanese counterpart in the fight against inflation. In other words, the regulator is keeping the benchmark interest rate low. At its meeting, the Chinese regulator kept the rate unchanged at 2.5%. It also injected 289 billion yuan of liquidity into the banking system, the largest injection since 2020. As a result, the Chinese yuan weakened against the US dollar on a Monday, hitting a two-week low, depreciating to almost 7.4 from a 6.7 since the beginning of the year. Meanwhile, the US currency has been weakening since Friday. The greenback has inched down to 106.45 from 106.75 against its G6 counterpart. After rallying sharply on Thursday on the back of strong US inflation data, the US dollar was trading in a narrow range of 106.40 and 106.60 on a Monday. It seems to have been dragged down by Michigan consumer sentiment. The indicator hit a 5-month low. On the other hand, the US expects inflation growth in the coming year to post 3.8%. In addition, comments from the majority of Federal Reserve speakers last week showed that policymakers were sticking to a softer outlook for interest rates. As a result of the sharp rise in Treasury yields, there may be no need for monetary policy tightening in the United States this year. As the FedWatch tool shows, 93.5% of the market does not expect a rate hike in November. Nevertheless, the US dollar has shown high volatility in Asia as it continues to act as a safe haven asset, despite its decline. Meanwhile, the dollar-yen pair demonstrates even greater volatility. From the Bank of Japan's point of view, it looks really threatening. That's why Japan's Finance Minister Shinichi Suzuki warned investors on Friday that excessive movements in the currency market were undesirable. Against this backdrop, speculation about possible intervention by the Japanese authorities in the forex market continues. Many see the area above the level of 150 as an intervention territory. On the chart, the pair has not tested this level, and the yen also began the new week at 149. During Monday's Asian session, the dollar-yen pair traded in the range of 149.30 and 149.60. Notably, the yen has already lost more than 12% against the US dollar this year. The weakness of the Japanese currency is weighing on the domestic economy. Reports showed that industrial production in Japan declined for the second month in a row, and this was mainly due to a decline in the production of cars and transport equipment. On a yearly basis, this indicator slumped to 4.4%, the lowest level since April 2020. The decline in the manufacturing activity in Japan and China is harming the antipodium currencies. At the same time, the situation in the Middle East is driving global oil prices up. WTI jumped by 6% on a Friday and consolidated its recent gains on a Monday, stabilizing above $87 a barrel. As a result, the Australian dollar also broke its losing streak on a Friday and moved higher. Today, the Aussie dollar pair continued to strengthen in the range of 0.6292 and 0.6333. However, it remains well below the key resistance at 0.6400. In the Asian session, the pair closed near 0.6324. The New Zealand dollar moved to 0.5925 from the support of 0.5880 at the close of the Asian session on Monday. Following Saturday's election results, the country has a new Prime Minister, Christopher Luxon. A former interim Prime Minister, Chris Hipkins, considered defeat. As a result, the risk sentiment in the equity markets has taken a backseat. The Kiwi strengthened against the US dollar and continued to rise in a Monday's trading in the range of 0.5886 and 0.5930. In addition, the Reserve Bank of New Zealand stated in early October that inflation in the country was still too high, and this means that the regulator may keep its interest rate higher for longer. Against the backdrop of high oil prices, the Indian rupee is looking quite vulnerable. Against the US dollar, the country shifted higher and was in the range of 83.20 and 83.29 during the Asian session. However, the country's central bank has been actively intervening in the markets to prevent the exchange rate from falling below the record low of 83.29. Therefore, intervention by the Indian regulator cannot be ruled out today. The Euro-Rupee pair also started a new week on the upside near 87.75. And that's all for now, but keep in mind that the market is changing constantly. Subscribe to the InstaForex TV channel, leave your comments and questions under the video, and we will be happy to get feedback. See you online soon.